AMC is down about 6.5% today based off of a data point that came out today, and it is the ISM non-manufacturing PMI. It showed manufacturing accelerated in the month of November at a much faster rate than people were expecting. When you mix that with wages really going much higher and the consumer still looking pretty good, it kind of puts the Fed in an interesting situation where if inflation does not come back down to 2% in a reasonable time frame, then they have room to keep raising rates theoretically. Who knows if there's something going on under the surface, and that's the reason why the Fed is indicating that they're going to slow down raising rates. But this is not good for the Fed's ultimatum of slower growth to get inflation down, guys. So we have a lot to talk about in a very short amount of time. We're going to go over everything that is happening in the markets today, and we are going to talk about everything you need to know with AMC. So let's not waste any time. Let's get straight into this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you have not already, baby, and let me know what you did over the weekend down below in that comment section. So where we currently sit, the stock is at $7.65 per share, down about 6.36%. It's pretty volatile, so these numbers might be a little bit different by the time you guys see this video, but you're still holding up at the higher end range of this break of the 50-day moving average. What I mean by that, since you have broke the 50-day moving average, you have been in this range of, just call it $6.79 and about $8 per share. You're still at the higher end range of where we have been trading over the past 2-3 trading weeks now. So when you put it in that perspective, you're still looking more bullish than not. And today is one of those days where you're still seeing low volume comparatively to these rallies, right? AMC, 100 million shares trading hands, 200 million shares trading hands. That was not all too, uncommon during these big rallies, and even post rallies, to see the volume in between 30 and 50 million on a daily basis was not too unnatural. And AMC's volume today is sitting at about 21 million, so it's slightly under where that volume consistently is with that post rally trading activity, right? And that's kind of what we're in right now. The stock went up on December 1st, about 13% was the final close, but we were up almost 30% at some points intraday on December 1st, and you actually hit a high of $9.15 per share. This was above the 100 and the 200-day moving averages. We did that in one day, but we did come back down to close under those moving averages, and we've been trading pretty much sideways over the last 2 trading days now, and I think today is really no different in the grand scope of things. If we continue to head down lower tomorrow in the same degree that we're seeing today, call it another 6 to 10% down day tomorrow, that would mean a pretty bad day for the indexes. That would get us close to that 50-day moving average, and depending on if we break under or hold above, that's where things are going to get very interesting. But we have a lot of cushion left before we even get to the 50-day moving average, so I have no reason to believe that you're going to see a massive red day again tomorrow. Typically these big red days in the markets tend to lead to greener days after. Now, one important thing to note, as I am currently filming this video, the S&P 500 is down almost 2%. It is because mainly the bond yields are going up today. TLT is falling. That does mean bonds are going up, so that is a normal correlation we have seen in 2022, and the dollar is going up as well, which is again very bearish, a normal correlation that we have seen throughout 2022. So you're getting back to a little bit of that normal correlation. What I kind of talked about last week is if the bond yields keep going lower, meaning this chart keeps going higher, and the dollar keeps going lower, meaning the dollar is weakening, at the same time the stock market goes lower, well, that would not be a good thing. That's basically flashing recession fears in your face, guys. And the whole reason for all of this pain in the markets today is this: U.S. services industry regains steam, factory orders accelerate. Service industry activity picks up in November, employment rebounds, supplier deliveries improve, factory orders increase 1% in October. And it does say U.S. services industry activity unexpectedly picked up in November, with employment rebounding, offering more evidence of underlying momentum in the economy as it braces for an anticipated recession next year. So in a weird way, a recession is going to be the ultimate negative thing. Forget the Fed raising rates. A recession will be more negative than that to the markets. But at the same time, it's like the markets want us to hardly avoid recession. That's where the stock market kind of wants the economy, is barely above a recession, so we can stop out inflation while not killing the economy and not completely stopping growth. So it's going to be pretty hard to achieve. But hey, we'll see. And this is another one of those days where you're getting bad data for the Fed, for inflation, and it's feeding into equity prices. It doesn't always feed into equity prices, but today it definitely is. Now, if we take a look at the Ortex data for AMC stock, we can see the short interest is up by about 1% today, and that's the aggregate number of short interest. So we are now at about 21% live short interest of free float again, and the amount of shares currently sold short sits at 107.1 million, up about 826,000 shares on the day. The cost to borrow numbers continue to be sky high at 30.27%, cost to borrow average at about 33%, cost to borrow maximum at about 58.5%, and cost to borrow minimum at 16.09%. So these numbers still looking beautiful, and until we either break under, just to put it out here, under the 50-day moving average and you get into a negative downtrend, or the data just somehow dissipates on the Ortex data, short interest drops off a cliff at the next report date, or the cost to borrow drops like a rock, I gotta be bullish on the stock no matter what is happening in the stock market. And even as you guys can see, as I've been filming this video, the stock market has been going lower, but AMC has not really been reacting in the same way. So I think that is also a good thing to point out. As far as option activity, positive order value for the day sitting at 71%, very, very positive. 68 orders totaling $3.68 million. So not too often do you see a 70% positive order value. You are getting that today. That is definitely a positive thing, right? You want to see a lot of bullish dollars heading into AMC, especially by institutional investors. Now, tomorrow on the front of economic data, you have the balance of trade for October for the United States and the balance of trade for October for Canada. I mean, I don't think this is going to be a big deal. People might pay more attention to it now as there is fears about a recession, but I don't think it's going to be something that will really move the markets. We'll see. On Wednesday, you have the Bank of Canada interest rate decision coming out at 2 p.m. And, you know, depending on what happens with that, that could be key. Markets are expecting a 50 basis point rate hike. If you do get a 25 basis point rate hike, that might be bullish, you know, just because Canada's inflation rate is not nearly as high as ours is. So we'll have to wait and see. It could definitely move things around and move around the Fed rate hike expectations. Now, another quick look at the companies that are going to be reporting earnings tomorrow in pre-markets. If you guys want to trade some of these or whatnot, here you have it. AutoZone, Signet Jewelers, can't even say that one. Couchbase, Cons, Home Plus. It looks like Jill, Alico, Ferguson, Lilium, and I don't even know, Waterdrop Inc. I'm not sure what kind of company that is. A lot of these you guys probably haven't heard about before, but AutoZone definitely could be important to the markets. Tuesday in after hours, you are going to have Dave & Buster's, Smith & Wesson, Stitch Fix. Those can definitely move around quite a bit, and Toll Brothers, can't leave that one out as well. And you guys know the big one, at least for us, the momentum kind of traders, is going to be GameStop earnings Wednesday in after hours, guys. So not too much else to actually add on to this video. You know, a just quick look at GME as well, down about the same as AMC, down about almost 7% now. But there's a big difference between the charts alone of AMC and GME, because GME does not have the same bullish pattern as AMC. It just broke under the 50-day moving average, in which AMC is above its 50-day moving average. It's been a lot of choppy back and forth. You really haven't broke out and hit that high, or broke out above the 100 or 200-day moving averages. Still, in this whole time that AMC has rallied, GameStop really has not been doing all too much. And just by a quick look at the charts, you could see the difference between the two and how much more bullish AMC looks for that next leg of the rally, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.